Ethereum just had a massive crash. And yet, some of the biggest banks on Wall Street are calling for a 70% surge to a new all-time high. How is that possible? Sounds kind of crazy, right? Well, today we're breaking down what analysts are calling a perfect storm of events that could make this not just possible, but actually pretty likely. Let's get right into it. So yeah, just a few months back, a pretty brutal price crash wiped out billions from Ethereum's value. So you got to ask, why are the world's biggest banks suddenly forecasting this huge rally to $5,000? It seems like a complete contradiction. But to really get it, we first have to look at how that very crash, believe it or not, might have created the perfect launchpad for what's coming next. Okay, first up, let's talk about that crash. What looked like a total disaster on the surface was actually what the pros are calling a leverage reset. Think of it as a necessary cleansing fire. And understanding this one concept is really the key to everything else we're going to talk about. So, rewind to late 2025. The market was absolutely on fire. Pure euphoria. Bitcoin just blew past $125,000, and it honestly felt like the party would never end. But here was the problem. That whole rally, it was fueled by a giant mountain of risky, borrowed money. So when the music stopped, the correction was just brutal. Ethereum plunged from almost $5,000 all the way down to $2,800. But this wasn't a failure of the technology. No, this was the market doing its job, a really painful but totally essential flush out of all the gamblers and short-term speculators. And here's the most important thing to get from that whole crash. It forced this huge transfer of Ethereum from what we call weak hands, short-term traders just gambling on the price, over to strong hands. These are the long-term believers, the institutions, who saw that dip as a massive buying opportunity. So what this did was create a much, much healthier foundation for growth, built on people who are actually buying the asset, not just making wild bets on its future price. Now, what's so fascinating is that while all this chaos was happening in the markets, a kind of secret engine was switched on deep inside Ethereum's code. It was a huge upgrade called Fusaka, and it completely rewrote the rules for ETH's value. Let's take a look under the hood. The Fusaka upgrade was, it was a genuine triple threat. First, it instantly made transactions on other networks like Arbitrum and Optimism like 40 to 60% cheaper. Bam. Second, it tripled the network's total capacity. But the biggest change, the real game changer, was the third one. It flipped a switch that turned Ethereum from an inflationary asset into a deflationary one. And that just means the total supply of ETH now actually gets smaller over time. So the magic behind this is a little piece of code called EIP 791. The simplest way to think about it is like this. Imagine every transaction on Ethereum is like sending a package. Before, the shipping fee was all over the place. This upgrade sets a mandatory minimum shipping fee for every single package. And here's the kicker. Instead of that fee going to somebody, it gets tossed into a digital furnace and burned forever. Gone. This permanently reduces the total supply of ETH, making every single coin that's left just a little bit more scarce. And this chart right here, it shows you just how big of a deal that was. The network went from basically printing more ETH every single year to effectively unprinting it. This is the whole idea behind what people call ultrasound money, an asset that is literally programmed to become scarcer over time. So the longer you hold it, the rarer it gets. So, okay, we have a market that's been reset, and we have technology that's been supercharged. But that's only half the story, right? A powerful engine is useless without any fuel. And right now, that fuel is just flooding in from the biggest names in finance. And listen, this isn't just about ETFs anymore. We are in a completely new phase of deep, deep integration. You've got public companies putting their cash reserves into Ethereum just to earn yield, kind of like a dividend. You've got the world's largest asset manager, BlackRock, putting real-world assets like investment funds right onto the network. And you even have giants like JP Morgan getting ready to accept ETH as collateral for major loans. This isn't just a trend. The financial system is being rebuilt on this stuff. This quote just says it all. It's from the CEO of JP Morgan. This is a guy who once famously called Bitcoin now come out and say that digital assets are part of the system. Well, that just shows you how dramatically the tide has turned. The debate is over. The age of integration is here. And if you want to see the scale of this integration in just one number, here it is. $6 trillion. Let that sink in for a second. That's how much value in digital dollars is already moving across the Ethereum network every year. And this isn't people gambling on price. No, this is real economic activity, and it's already on the same level as the entire Visa payment network. All of this real-world use is creating what analysts are now calling hybrid finance. And the core idea is really simple. The wall between crypto and traditional finance, it's disappearing. They're merging together into a single global system, with Ethereum acting as this neutral, foundational layer that everything settles on top of. Okay, so let's just do a quick recap. We've got a healthier market, we've got supercharged technology, and the world's biggest financial players are all in. So, that brings us to the big question. With all this momentum, what are the actual price predictions? When could we actually see Ethereum hit $5,000? Well, the analyst consensus here is pretty staggering. One model that averages out 10 different valuation methods puts Ethereum's fair value today at almost $4,800. But look at the future targets. Standard Chartered is calling for $7,500 by the end of next year, with some models going as high as $12,000 for 2026. The theme across all of them is the same. So if we kind of average out all these different models, a pretty clear path starts to emerge. Step 1 is breaking through that key resistance level around $3,500. Once that happens, the data suggests the most likely window for a sustained move above $5,000 is the first few months of 2026. That's when the full economic impact of that Fusaka supply shock is really expected to hit the market. Of course, nothing in markets ever goes in a straight line up. To be really clear-eyed about this, we have to look at the potential headwinds, the major risks that could slow this whole thing down. There are basically three main risks on everyone's radar. First, messy global regulations that just create a lot of uncertainty. Second, a major economic downturn or a surprise interest rate hike that pulls money out of all risk assets, not just crypto. And third, a more crypto-specific risk. This idea that these secondary networks could become so successful that they stop paying fees back to the main Ethereum chain, which would, essentially starve the mothership of its value. These are definitely things to keep an eye on. So there you have it, the perfect storm. A market cleansed of gamblers, a supercharged deflationary engine, and the biggest money in the world plugging right in. If you found this breakdown valuable, do me a favor and hit that subscribe button for more deep dives just like this one. The fundamentals really seem to be pointing in one direction, which leaves us with the ultimate question. For Ethereum, is $5,000 no longer a destination, but simply a milestone on a much, much longer journey? Let me know what you think down in the comments.